Hey, am I on? Yes. Okay, excellent. Good afternoon. Thank you for sharing your Wednesday afternoons with us in what I think is going to be the highlight of your afternoon. And I can say a high degree of confidence. Why? Because carbon is back. Carbon is very much back on the Green Finance Association agenda. And the second reason is because I'm joined by these four experts and indeed sort of pioneers in their respective fields. And so just to reiterate a little bit of housekeeping before we start, as Jenny said, please ask your questions. You know, this hopefully will be quite a fluid conversation. So if there's anything you want to know about carbon related, then please just fire your questions in. And I think the second just bit of housekeeping to note is that I'm afraid to say that all my panelists are wearing the wrong color socks. But the Green Finance Association, we believe in the sort of in carrots rather than sticks to incentivize better behavior. So we'll see what happens next year. So let's move on and just start, if we may. In this session, we're going to try and cover carbon accounting, carbon pricing, and also offsetting, and maybe a little bit of carbon markets. That's a lot to sort of shoehorn into one session. So let's start, if we may, with carbon accounting, and specifically carbon accounting for corporates. Now, everyone here will know, and I'm sure agree, that it's almost compulsory now that we say or hear ISSB at least 10 times a day. And I think we've all met our sort of weekly quota already here during today's sessions. It's important. What we want to do now is actually get more into the weeds. And we want to talk about sort of ISSB as a sort of tool for carbon accounting. And specifically, and I'm going to ask Loretta to lead us off, as we're gearing up in Hong Kong for it's the new Appendix 27 ISSB aligned with respect to S2 almost, not yet S1. We're getting ready for that. And then last week we have an announcement from HKGFA or their, the publication of their exposure drafts, which I'm sure for some causes a little bit of confusion. So let's start, if we can, just with perhaps just a straightforward question: is how is ISSB going to impact Hong Kong companies?
Okay.
Loretta.
Thank you, Ben, for the question. I'm happy to be here to share some of those perspectives. Well, first of all, I have deliberately to choose brown today instead of green because I know that a lot of ladies will be choosing a green dress today. But at the same time, I do not have green socks. That's why I choose a brand dress. Okay, taking jokes aside, I actually would like to start with the Hong Kong EX new climate requirements. I understand that may cause a lot of confusion. It's the new Appendix 27 is now being re-indexed as Appendix C2, and the Part D is the new part. Part A to C is the old Appendix 27, so to speak. But I guess the first thing that I want to mention is that this is solely for the listed issuers in Hong Kong, meaning the equity issuers, not even debt issuers. And secondly, is, as mentioned by Ben, is closely assigned to ISSB with some tweaks, which is I'm going to talk about later. And I guess you talk about, mandatory. One thing is really mandatory for the Hong Kong EX new rules is that Scope 1 and Scope 2 emissions, carbon emissions, that is definitely mandatory. And it's basically for large cap issuers, for the other main board issuers, and also for GEM. And then for the other new climate requirements, it's actually for the large cap, it is mandatory for the period beginning Jan 2026, comply or explain in 2025. But for the other issuers, it would be comply, explain for the main board, and then basically voluntary for GEM. So what's the implication of that? Well, first of all, whenever people think about like mandatory, people don't like that idea. But I want to say that this disclosure for Scope 1 and Scope 2 have always been on a comply and explain basis. So it should be no surprise. But at the same time, I think it is important to see how people would be looking at this, comply or explain mode approach, because there are implementation reliefs associated with ISSB that is also be included in the EX climate exchange rules. So how you actually apply, what sort of relief that you are going to take, in order to be compliant, but at the same time not being able to disclose too much, I think it's interesting to see how the state of play would be in the first set of the reporting. And then you mentioned about, greenhouse gas protocol, because that is supposed to be the standard that is being used. This set of corporate accounting and reporting standard is being issued by 2004. And apparently, the accounting standard has changed so much. We have the variable interest entities. And particularly when you talk about those disclosures, we talk about the equity approach, control approach, et cetera. So how are you going to account for all these new accounting standards and take into account the carbon standards? I'd love to say that, in fact, the GHG protocol, they were really planning to have a consultation starting in 2025 so that the relevant changes could be incorporated in the new set of the carbon accounting rules. So I think that is actually a very important implication to the ISSB. And of course, with the ISSB, this new set of standards is supposed to bring consistency to the market, and how that eventually that is going to impact the corporate's ESG rating. How would the other stakeholders would make use of the information, and how do those corporates in the same industry would be comparing against each other in terms of their carbon intensity, et cetera, et cetera. I think that is some very interesting development that is going to note in the future.
Okay, and what can we expect? Sorry, Mark.
I was just going to pick up on something there. I think we're in a really interesting point in time. So ISSB have come out. As Loretta said, the Greenhouse Gas Protocol, they're formalizing their governance structure at the moment, and they're about to launch a consultation around reviewing their Scope 1, Scope 2, and Scope 3 in particular framework. And at the same time, SBTI is going through these changes as well. And so I was at New York Climate Week recently, and what was really interesting was ISSB are engaging with all of those parties. So the prospect of the holy grail of what corporates have been looking for, of alignment, and this lack of a consistent approach to carbon accounting is very, it's very close, and hopefully the opportunity is seized, because that will significantly reduce the reporting burden on companies if we can follow a consistent approach globally on this reporting systems.
Sure, which probably just leads neatly on. I'm just already mindful of time, but so we have mandatory Scope 1 and 2 disclosure, the Scope 3 disclose or explain, but if you aren't in a position to disclose, you need to have a sort of a pathway or a plan in place.
Would be mandatory, though.
Through which to. So how will the ICPA's sort of version,
Sure,
as it were, sort of enhance or change what we already understand would be in the new Appendix 27?
Okay, thank you. I think there is a lot of confusion between the thinking about Hong Kong EX new climate requirements versus the Hong Kong ICPA, the exposure draft. First of all, I want to say that, again, Hong Kong EX exchange rules only apply to only the listed issuers. It's not applicable to other organizations, asset managers, whatever. It's not applicable. But at the same time, that if you are really looking at the Hong Kong, the HKICP has always been an accounting standard setter, so nobody will have any doubt about it. But in fact, the FSTB, the government has endorsed HKICPA to be also the sustainability reporting standard setter. So HKICPA therefore is actually issuing this of Hong Kong ISSB standard S1 and S2, which is actually, well, first of all, it's closely aligned to the Hong Kong EX new climate requirements. There is only a few differences. I would say that the first difference is the requirement for disclosure of industry-based matrices. The EX rules does not require the disclosure of industry-based matrices, while the ISSB, S2, it does require that. So I think that eases off a lot of burden for the Hong Kong listed issuers. And secondly, there is also you do not need to separate the Scope 1 and Scope 2 emissions of the consolidated groups versus the other investees. So there is another relief. And I guess the other biggest difference is that whether you will need to disclose the percentage of the executive remuneration that is linked to climate-related the considerations. So ISSB, you would need to disclose that percentage, but under the ICS rules, you don't need to do that. So that is some differences. And then for the Hong Kong ICPA, it's supposed to have this global baseline for the sustainability reporting standard. However, exactly like which organization, which corporates would need to use it, in accordance with the ISSB inaugural jurisdiction guide, the expectation is that it started off with the publicly accountable entities. Publicly accountable entities, as you can imagine, first of all, the listed entity, so Hong Kong EX, we have already done that, and the rest would be talking about other regulated business, as you can imagine, insurance companies, asset managers, trustees, that's what in that space. So what we were expecting is the Hong Kong MA, SFC, MPFA, and also the Insurance Authority are going to issue consultations in relation to that, the adoption of S2, and that is going to happen very soon as well.
So consistent with the overall theme of transition, we're in a period of transition.
Right.
But it's the ICPA that will be sort of setting. The Hong Kong rules with respect to climate and ESG disclosure, and that won't just be in respect of listed companies, but also for regulated entities, insurance providers, et cetera, et cetera.
Yes.
Okay, let's pause there and sort of switch gears very slightly and turn our attention to a related theme, internal carbon pricing. And Mark, this is very much your wheelhouse, I know. So tell us just briefly, if you would, what is internal carbon pricing, and why do you at Swire Group use it?
Well, on a basic level, internal carbon pricing is attaching a price to the externalities produced by the business, and it's used to drive internal decision making. So why did we set an internal carbon price? It was probably for three main reasons. So one is to facilitate internal discussions around the achievement of our net zero target. So we've set a net zero by 2050 target and a 50% reduction in our direct emissions by 2030 to facilitate the movement of finance internally towards achieving those goals, to facilitate the discussions at a board and an executive level about how we go about achieving that target. Internal carbon pricing is a very valuable tool. Another reason is that it meets external investor expectations. So if you look externally, there's been a significant increase in external carbon pricing. We've heard recently that the Chinese government is expanding its carbon trading platform beyond the power utility sector to cover heavy emitting sectors like cement, steel, aluminium. So with the rise of external carbon pricing as well as expectations from regulators, so ISSB talks about the use of internal carbon pricing, it's meeting that expectation. But also it's around driving internal capital expenditure. So for a number of years, Swire has had an internal sustainability fund, a $100 million a year fund that provides bridge financing for sustainability projects that don't meet the internal hurdle rates for the business, as well as fully funding innovation. But that only took us so far. So internal carbon pricing is meant to be a complementary tool to actually drive internal financing now. So we can talk about the approach that we've adopted, but it's essentially around driving financing at the present time, as well as driving the future decarbonisation of the business through our investment decision making.
And this fund you mentioned, this is for internal projects?
To be clear, before people start sending me messages about access, yes, it's for internal Swire only businesses, yeah.
Bad luck.
Just kind of riff on this a little bit. What Mark's describing is kind of that, like, how do you actually take this information that Loretta's talking about? This very complex accounting information. How do you analyze that and price the externality and then act on it, right? I mean, it's a fairly simple kind of sequence of events, but all happening kind of mostly in the voluntary action space, right? I mean, the disclosure, yeah, we're getting more and more, compliance, mandatory focused things on it. analysis and disclosure of, sort of what you're doing internally, to the regulators is starting to look a little bit more enforceable over time. And so, that final step of like taking action, like whether it's through a fund to fund decarbonization internally or to offset or to engage, in reducing carbon, it is exactly what's supposed to be happening. Now, we might want to have government play a bigger role sooner, but in the absence of that, I mean, you can't. This is the thing we can do now.
Yeah, I mean, it's a massively valuable tool for us internally. So, and it also allows us to capture the sort of like the rate of change that's happening externally. So when we initially looked at setting the carbon price and did the internal research back in 2021, so the pricing has been in place since 2022, we have a shadow carbon price, which is applied to future investments, and a carbon fee, which is essentially an internal carbon tax for our businesses on the basis of the emissions they produce. When we did the initial research, we set the carbon fee at $22 a ton and the shadow carbon price at $50 a ton. When we reviewed it last year, 2 years later, looking at the rate of change of how carbon pricing has shifted, we've doubled it. So the carbon fee is now $40 a ton. So each of our businesses are taxed on $40 a ton, and that money has to be reinvested within the business on decarbonisation projects, and $100 a ton for the shadow carbon price.
How straightforward or internally uncontroversial has it been to determine the carbon prices that you use, the shadow price and then the sort of the internal tax?
Well, so we used, we didn't pluck the number out of the air. So the initial pricing was set by the carbon fee. We looked at what other businesses were applying and disclosing via CDP and picked the median price. And then for the shadow carbon price, we aligned it with the shared socio-economic pathway modeling within the IEA climate models that were aligned with the Paris Agreement. Our more recent adjustment, we essentially, there's a body within the UN that looks at carbon pricing, and we essentially aligned with that. And so following those pathways to get us to net zero by 2050, we aligned our carbon pricing on that basis. So that's what led to the increase to $40 a ton for where we need to be now, and $100 a ton where we need to be post-2030.
So let me just pick on a remark you made a few remarks ago. You said in relation to the internal carbon price, it's a massively valuable tool for Swire Group. Yet my understanding is there's no obligation, there's no mandatory requirement for any company. There's not a requirement under ISSB for companies to disclose an internal carbon price. If they
So under ISSB, they're required to disclose whether they have it and how they use it, but they're not required to have it.
Not required to have one.
Yeah.
But it's required to be disclosed under S2.
So notwithstanding, there's no mandatory requirement. It's still massively valuable, in your opinion, to your company. So presumably every company is doing it.
No. So I think we're probably one of the few in Asia Pacific. It's a bit more common, particularly within the European market. But for us, we look at global best practice and look at aligning ourselves with global best practice. So we're not navel gazing and looking, what other companies within Hong Kong are necessarily doing. We don't compare ourselves with the Hong Kong market. We compare ourselves with the international market. And shadow carbon pricing has been around for quite some time. I was talking to a company and I was feeling quite proud of myself that we'd rolled out internal carbon pricing in 2022, and this French company, it's Chatham, so I couldn't say who they were, but they were like, oh yeah, we rolled it out in 2014.
You're good, but not that good.
So that put me back on my, kicked me off the pedestal a little bit.
And just a last question before we move on, and I'm just reflecting on a question we've received from the audience. How frequently do you sort of recalibrate?
Annually. So within the carbon pricing approach that we took, we built in an annual review mechanism. And so we will review and ratchet up, and it's aligned with the budgeting cycle. So particularly for the carbon fee, so that our businesses can build that into their forward budgeting plan.
Great. Okay, thank you. Let's pause there with carbon pricing. Let's sort of switch, if not gears, themes slightly again. Ken, let's talk a little bit about offsetting, because we can't have a carbon discussion without offsetting. It's already come up in a number of remarks already over the course of today's events. What do you, and I guess by you I really mean HKEX, but you can decide which hat you're wearing, but what's the role of offsetting as you see it in net zero transition, and how is HKEX sort of supporting listcos to decarbonize?
I try put off the head first and make it easy. So for the offsetting, I think in general there are a couple of uses. The first one is on the basis that where the project needs financing in order to sustain those projects we have create additional environmental impact, i.e. money, right? Divert capital to where you sustain the project and make an environmental impact. That's one. Very, very basic usage of offsets. The second one is more from the user side of that. There are multiple ways to look into it. One, of course, like what you mentioned, that company, after spending tremendous effort trying to reduce, and for the unabatable portion of emission that they can use offsets as a way to mitigate and try to bridge between the long-term and short-term decarbonization goals. I think that is one of very common use for offsets. Of course, there are two more, which is more related to like quasi-compliance usage. One is actually like some jurisdiction allow using voluntary carbon credits as a way to offset like carbon tax obligation, like Singapore. I think that's one of it. The other one is there are also industry where subject to reporting, participation, that they can use credit to offset emission as committed to that industry. I think there are multiple usage of offsets as a whole in the market. But of course, in general, how EX, and put that head of EX, and how do we help the company? I think there are a couple of ways that we're doing that. Also, though, which I think is quite popularly known. One is about the regulatory role. I think there are a lot of discussion like just now on the disclosure base, not just like facilitating the investor to get used like that company to make it comparable, but also trying to draw more attention to issuers, because we talk about, like, say, EX is a company, to understand the business and take action early. I think that's one of the way that we're trying to help the market. That's one. And second one is we also act as a market operator. There are multiple things that we have done. Of course, listing rules that like 18C and various chapters that allow and facilitate like green tax and new economy to obtain funding. There are some discussion moving on like climate tax, climate tech technology that's very interesting and relevant to decarbonize the society. And of course, that back to core, and we have core climate that facilitate carbon transactions and settlement and things. People can acquire quality credit through the platform. There are multiple things that we're also working in the market side. So in general, we're trying to catch up and we're trying to learn. We try to do more in the sustainable development.
So a few 2-3 years ago, we were all getting very excited in Hong Kong about carbon markets, and we wrote a number of pieces, and we were all writing pieces about Hong Kong's role in carbon markets and all this sort of stuff. And then it all went, somewhere between quiet and dead, frankly. Mm-hmm. So what are the current sort of supply side and demand side challenges as you see them? And how are we going to, what's the timeline? When are we going to see this sort of carbon market sort of, mecca that we want?
Sure. We're all breathing, so we're alive. So I think that it's a process. I think carbon market by nature is still very nascent. And like many other markets where we have security markets, we have bonds, we have debt, where basically every kind of instrument or market undergoes similar kind of pattern, be it earlier, later, lighter, or more vigorous. So I think it's a normal process as such. But you rightly point out that in the past 2 years, probably there are a lot of things happening in the market. I think also Charles can also chip in on that. Rather than just saying on the supply side, I think demand side is one. But of course, when we talk about demand side, there are also, I mean, in general, there are a couple of things. One is how to use offsets as a way that we can make reasonable claims, comply to certain rules, because it's one of the very important topics. How do you use offset in a reasonable way rather than you just buy offset for the sake of doing nothing, right? I mean, that's one of the very, very important element to using offset. There are organizations like VCMI trying to provide guidelines for offset users in order to, to visualize, to have the market understand what they're doing and what they're trying to achieve. That's one thing. Second one is, depends on location. I think there are locations moving north of the curve where there are sophisticated market and the mindset is quite different. Some of the locations were trying to be more proactive in using offset as a way of part of their decarbonizing or strategy. Some other location, and probably more like Asia, that is still in the early stage. They want to understand what it is. It's still lean on more like a mandatory requirement in order to get the traction out of that. I think that is on the demand side challenge. On the supply side, I think in the past 2 years, there are a lot of different discussions or even news controversies surrounding different types of projects. But of course, I think to that, I think there are different organizations like ICVCM provide standard of the standard in order to, get more confidence to the project, make sure that there is a comparable, easy to be visualized labels or standards in order to know that, okay, these standards, methodologies, or projects are up to integrity. But on the demand side, there are indeed some sort of, a lot of moving parts.
Let me just jump in. When we talk about sort of transition finance in Hong Kong, we're talking sometimes about how we're going to transition ourselves and meet our own sort of net zero ambitions and targets. Sometimes we're talking about how do we, as a financial center, support the transition finance needs of mainland, of course, and our neighbors and internationally. Right. So is there still a business case for Hong Kong sort of connecting sort of offshore buyers to the mainland's carbon markets, and with a particular focus on CCERs that we've been talking about and getting sort of excited about and then deflated about for a little while now?
Why don't we split it into probably two parts? One is on the first question about the business case. I think the way I see it, of course, Hong Kong has a very special position as a bridge between onshore and offshore. So there are many things that we can do. But specifically for carbon market, whether an offshore or international participant should be connected to Chinese market, I think I try to make 2-3 points on that. One is there are indeed existing scheme that offshore participant can participate into Chinese carbon market. It's not new. It's been running for quite a while, including some pilot market in, say, Shenzhen, Guangzhou, and Hubei. There are up and running rules which allow offshore participation. Of course, it's not voluntary. It's like pilot quotas or allowance as such. That's one. The second one is, I think at the end of the day, what we're trying to do, it really depends on the objectives that we want to achieve. I think the fundament of collaboration, rather than just say connecting, is to assist the country to achieve a dual carbon goal. I think that is very, very valid and immediate, imminent goals as always there. So to what sort of measures or ways in order to do that. I think bring, like for example, international participants to participate into Chinese carbon market could be one, because it could be beneficial to diversify participant groups, bring new capital, fresh capital, and so. But at the end of the day, I tend not to just focus on one main, but I think it could be a portfolio, it could be different options, and we're open for discussion. I think that is the second point about this question. Now, going back to the other part of your question, which is quite important, is about the development of CCER. Essentially, it is actually, I take it as a quasi-mandatory rules, because the fundament of that is to support the CA market to function, because they have a 5% offset of that. But like what you say, it's very, very happening in the past, I would say, 1 or 2 years. In 2023, there are issuance by ME on the overarching rules for CCR trading. That's one. And second one, that there are different authorities make it very clear in terms of who doing what, like including Beijing Green Exchange, where we signed an MOU with last year, and they're responsible for centralized trading of CCR and so on. And more recently, in 2024, the trading, of course, I can say resumed, but launched in January, still vintage, but it's a very first step to be a very solid step of CCR, traction has been resumed. And last but not least is that there are new methodologies. There are 4 of them has been issued, and 2 of them are now under consultation. One is coal mine methane. The other one is tunnel lighting. I think all these mark a lot of the developments in the CCR market after all.
Okay. So there is still a business case. Hesitation, we'll take that as a yes. Everyone can breathe a sigh of relief.
Go ahead.
I want to move on, but I want to sort of segue into sort of the next part of our discussion on carbon credits by just picking up on a comment that you made, Mark, or at least a reference that you made to SBTI. As I understand, SBTI for, I guess, the longest time had been sort of anti-offsetting. You correct me if I'm misquoting on that. They made an announcement relatively recently that actually perhaps they were changing their position with regards to offsetting, and then quite quickly sort of got back on the fence, and now I don't think we quite know what their position is vis-a-vis offsetting, whether it's permissible under their rules, and probably we won't know until sometime next year. So I'm not sure whether, Charles, you want to have the first bash at this, but what's the impact of that, I suppose, uncertainty on the, I guess, the voluntary market, and specifically the appetite for corporates to buy carbon credits as part of their decarbonisation sort of toolkit and strategy?
Yeah, I mean, Mark and Loretta know, as business running businesses and serving businesses, the certainty factor is critical, right? And climate is a global problem for which we don't have a global solution, and governments pretty much abdicated their role until the Paris Agreement, and the UN mechanisms to manage a market didn't really work that well, right? And so the CDM, the Collaborative Development Mechanism, failed, into which the NGO sector stepped and tried to create a market, and maybe the NGO sector and the UN are maybe not the best entities to create market rules and manage a market, but they're all we have in the meantime, until I think what you've seen more recently is governments stepping up and creating carbon markets. SBTI was one of the NGO efforts essentially to help companies queue up and figure out how you get down this track for decarbonization. It turned a little bit, I would almost call it kind of hyper-ideological, and decided, look, we must take this down the track of decarbonization only, and no sort of economic theory around what's the most efficient way of decarbonizing, right? In many cases, let's say every time we get on an airplane for the next 30 years, it's not going to be carbon-free, and that's going to need to get offset, right? And so what governments have done, I think really smartly, is stepped into this breach of regulation and breach of this vacuum and created essentially a carbon market that allows for project carbon. And I'll stop using the term voluntary carbon market because I think we've probably seen the peak of the voluntary carbon market. It's project carbon, right? And Singapore, China, Japan, Korea in this region, Australia, many countries in Latin America, all of Europe, Asia, or all of, many parts of North America allow for the use of project carbon in their regulated structure. Now, whether you got it right or not is another question entirely, and Ken mentioned the ICVCM and the quality measures around that, but I think SBTI is fundamentally wrong on this notion that we only must decarbonize internally. That's just not going to happen for a variety of reasons and for a variety of paces, and we need to figure out how to drive finance, especially to the developing world, to deal with a just transition. So that's my view on the SBTI.
Well, we're going to come back to you, but Mark, you...
Yeah, so just to clarify, so SBTI did allow for the limited use of carbon removal credits, so not carbon avoidance type projects, or it had to be around removing carbon from the atmosphere, but it was only allowable for the residual emissions after a business had radically decarbonized its scope 1, 2, and 3. And, there are legitimate concerns around overuse of carbon offsets, disincentivizing businesses to actually reducing their carbon footprint. So there is an element of justification within the SBTI stance, but I agree that the sort of like the zealous approach that they've taken to aggressive approach that they've taken against carbon credits has been problematic, and the fact that they're still in limbo is delaying businesses from making decisions around investments, because obviously you're not going to put forward a significant investment in carbon offsetting before you know where some of the international frameworks are going to land. And it's not just SBTI. I was talking to someone earlier, and they mentioned it's also unclear under Scope 3 accounting under the GHG protocol. So clarification needs to be made. Businesses like certainty, and so once that certainty is in place around how offsets are usable within a net zero strategy, and they are essential, so looking at Swire Group, potentially between 20 to 30% of our total emissions will need to be addressed through carbon removals because of our activity in hard to abate sectors, and the technologies are just not there for aviation, for example, to decarbonize. So carbon removal credits will be vital in any net zero strategy, but the rules need to be clear within those standard setters.
Interesting, because I think this is very much your wheelhouse, because you invest in carbon projects. So how does, what does a quality carbon project, or indeed a quality carbon credit, look like?
It goes through all of the processes that are currently in place, right? And you want to have the kind of auditing function that is built into the current system, which is certification standard, a verification and validation body that goes in and checks at the beginning of the credit, the project life at the medium term, and then on an annual basis. You need that kind of, just like you need in corporate accounting, right? You have to have PwC come in, give you an audit report, give you a clean bill of health every year, every 2 years. This is, it's not brain damage on how to get this right. And, there's certainly bad actors out there. There's bad actors everywhere. There's even a few bad Hong Kong taxi drivers I've had. How do we deal with these problems? Well, you get right in the middle of it, and you engage in the projects. You try to build these projects up. But here's the thing: carbon accounting is super difficult, right? At the corporate level, emissions accounting is notoriously fuzzy, right? You will never actually get it 100% right. You're never going to get to the 6th significant digit of accuracy on carbon accounting on the emissions side, and you're never going to get to 100% accuracy on the ton of carbon on a carbon sequestration project or a carbon avoidance project. So we just have to get a little more tolerant of inexactitude on both the emissions and on the sequestration, avoidance, and carbon capture and storage. That's not to excuse any of the frauds that have happened in the market. Lots of examples of that have hit the news. But there was so little money in the voluntary carbon market for the last 10 years until about 2021. It was at max $1 billion market, right? I mean, the Hong Kong Convention Center is $1 billion market, right? The entire farmers markets of Rhode Island is $1 billion market. This is a tiny thing. If we have $1 trillion carbon market, there will be a hell of a lot more quality control, audit functions, enforcement. I mean, just this last week, the U.S. attorney for New York announced indictments on one of the big carbon credit frauds. Absolutely awesome, terrific. That's going to discourage a lot of fraud.
Just one point to make. I echo what Charles mentioned, but exactly that the point, because it's so complicated, and the considerations are majority non-financial, like very environmental, which is actually the basic of that. Now, the question is, how can we blend finance element and environmental element together in order to make it, say, tradable, at least to attract capital in an easier way. As if you're a stock market investor, probably it's very hard to understand carbon offsets by looking into the PDD project development documentation, VVB, or like 300 pages of methodologies. It could be as difficult as reading a prospectus, right? And that's exactly the reason why one of the reasons why it didn't make it like billions or trillions of market size as such.
But that standardization is key, right?
It's Loretta's turn.
No, I was just going to, thank you. I was just going to mention that you mentioned about Scope 3 accounting. In fact, in accordance with the GHG protocol, when you measure Scope 3 accounting, there are just so many ways that you measure Scope 3 accounting. You can have the spend data method, you can have the activity data method, and also the level of precision itself can vary a lot. It can be also the product level, facility level, business unit level, entity level, etc. So I believe that when you apply Scope 3 accounting, different corporates could come up with like different Scope 3 emission. So I think definitely there is some revamp that is required in the whole carbon accounting regime.
Great, Mark.
I was just on the sort of like the necessity for improvement in the standards around the certification of the credits. It's key for businesses because obviously we're bearing a reputational risk through usage of those credits. And I seriously doubt that any company that's been caught out in some of the expose articles in The Guardian, for example, knowingly invested in bad carbon credit project. They would have bought off the market, maybe at the lowest possible price, but they would have invested in a project that they thought was valid and met a certain standard level. So improvements on those standards will be essential to sort of address market confidence. But to Loretta's point around Scope 3 accounting, I think businesses are panicking a little bit unnecessarily, I think, on Scope 3 accounting. We really, one of my favorite quotes that I bored the hell out of my team using, but Descartes said, don't let perfection be the enemy of the good. And there's this obsession on getting perfect Scope 3 accounting, and to me, it's not necessary. Where do you have influence? Ultimately, this should be around driving the decarbonisation of the economy. And if you don't have influence at tier 4, tier 5, then having perfect data there is in my mind, is a wasted effort because you are not able to actually influence at that level within your supply chain. So having perfect data to put into a report to send out to the market is great for the market, but it's not actually driving change. And everything that we're doing, whether it's around internal carbon pricing, investing in the carbon markets, carbon accounting needs to be about driving decarbonisation of the economy. And so the influence point and measuring where you have influence so that you can then engage with those suppliers and those relationships, leverage those relationships to drive decarbonisation within your value chain. That's where your focus needs to
I agree
be.
that we need to get the major ones done. 80-20 rule probably is what we should go for.
Yeah.
Can I, you know, as a lawyer and an environmentalist, I never imagined I'd be on stage, you know, acting like an investor talking about accounting. Right? It's an odd spot to find myself in, and especially not when the accounting issue is really affected by a very hyper-political, ideological view of the world. One which is pro-markets, and one which is anti-market and anti-corporate. And you get this, you know, in spades in the carbon market. You know, people will tear down a project and throw rocks at corporates because they do not want to have a carbon market that works, right? I mean, this is not about making a better carbon market for a lot of people. For a lot of us, it is, right? I mean, it's like, look, this is a solution that has to work for us to solve climate. We're gonna just ignore that ideological debate about, you know, whether socialism and capitalism, you know, who's going to win out in the end. But that's very much where this debate has originated, and what we see in the market. So I think the practical focus of governments, of Hong Kong Exchange, PwC, of Swire, and others is, you know, spot on. Like, let's get to work on this stuff, and let's stop arguing about the ideological aspect of you know, are carbon markets perfect, you know, or should we do a command and control regulatory structure like the Europeans?
Well, we don't unfortunately have time to get into CBAM, which takes sort of carbon accounting to a whole nother sort of trans-jurisdictional level. Just with the last couple of minutes that we have left, I want to just sort of pose a sort of a final question to all of you. It's like a sort of a quick fire. So no more than a minute, please. And so reflecting on the theme of today's event, which is financing Asia's net zero transition, you know, what's your, I guess from a professional perspective, what's your greatest transition challenge, and why is it worth trying to tackle it? Let's go back in the same order. Loretta, please.
Sure. I would probably say that it's actually important to make sure that we understand our carbon inventory. I think that is considered the biggest challenge. And in order to arrive at maybe at one stage, we should think about your carbon as your dollar. Your cash is your asset and your liability. Then you probably will have a better view about how to manage it. Thank you.
Thank you. Mark, please.
Okay, so from a Swire perspective, around 70% of our carbon emissions is our investment in Cathay Pacific, and that's 98% of that is jet fuel. So from the point of view of what is our biggest transition challenge, it's the availability of sustainable aviation fuel. Currently, about 80% of global supply is generated in North America and Europe, and that's because of tax incentives provided by the government to de-risk investments in that industry. So for the biggest challenge for us, the biggest transition challenge, is the lack of similar investments here in Hong Kong and mainland China. So very interested to see what comes out of the next 5-year plan, but also really interested to see what appears in the next CE policy address, because investment in sustainable aviation fuel is vital if Hong Kong's to remain a global aviation hub.
Great, thank you. Ken?
I think it's an exchange, rather than saying challenge, I think the overall thing is we have multiple heads where we're regulators, we're market operator, and we ourselves is a listed company. We need to comply with the rules and laws that we set for ourselves. I think the key thing is how do we take a fine line to continue to explore and innovate because all these things are very, very new, while we try to balance out and trying to make an impact, then taking a very, very prudent approach. I think that is one of the things that we should look after.
Charles?
It's fun to see Hong Kong Exchange, has to taste its own medicine, I think, right? Look, I think as goes China and India and Indonesia, 3 of the top 5, most populous countries on the planet. as goes these countries, so goes the rest of the planet, right? The leadership you're seeing now in China in particular, around the carbon market, around the imposition of the carbon, the ETS, the CCER system, rapid deployment over the last 3 years, impressive. Price has gone up. We're seeing a similar sort of evolution, a little bit, maybe a year or two behind in India. Indonesia's percolating as well. So look, these three huge economies will determine the future, our climate future, right? And that support for the efforts that they're taking, being a part of the building of that infrastructure that needs to be built, both on the regulatory side and the market side, is the critical challenge, and the one I think, if you're at this conference, that's what you're probably up for.
Great. Thank you. Thank you so much. Well, sadly, as always, we ran out of time just as we're warming up. So just final sort of summing up, it's important that we all need to understand our carbon inventory. We need to focus on solutions, and for that we need more financial incentives, we need more investment, we need to make an impact, we need to be ambitious to achieve that, and leadership is key. Perhaps as a final comment, if I may, Mark does not have $100 million or $100 billion for you, so don't call him. Thank you so much. Please join me in thanking our speakers, Mark, Loretta, Ken, and Charles. Thank you so much.